Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the macro view for Bitcoin. We'll be taking a look at the daily and weekly timeframes. We'll be taking a look at that weekly close position, see what's going on there and whether or not that's going to give us any intel into what to expect next week. Now as I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe by tapping the bell and selecting all the notifications. You will not miss another video update. If you haven't joined us in Discord, guys, you're missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and it is the first place that we go to notify you of everything that is going on in the crypto space. So why not check it out, linked in the description below. Let's make a start with everything Bitcoin on the weekly time frame. Okay, cool. So we're going to kind of start things on the weekly. I think that's a good place, and then we'll probably take a look at the daily and take it from there. So on the weekly time frame, what do we have here? Well, we do have the Gaussian channel on here, but before we talk about that, let's just reference where we are at the moment. As you can kind of see, and I kind of spoke about this briefly yesterday as well, we have a previous area of demand that we got rejected from, and we're coming back up here getting rejected from it. So essentially, if I break this down, we have a previous area of demand up here. Okay, we lost this area of demand up. This was basically kind of trying to find it as a support line or support level in May 2022. We lost it in June of 2022, going down into the lows of June 2022. Okay, now we're coming back up and we're testing it again. So essentially what's going on here? Well, we had people who found this as an area of demand, so people were buying. Okay, other people thought that this was going to hold, so they bought into this range over here. Fortunately, prices went down and they got trapped in their positions. So typically what you tend to find is when price retraces back up to where people were trapped, they can now get out of those positions. So typically what you tend to find, and it is only typical, it's not a hard and fast rule, but typically what you tend to find is that previous areas of demand turn into areas of supply, as in people are now selling cost neutral. Okay, they've not made any money, they've not lost any money, they just held through these months and now they're able to get out of those positions. Okay, so previous areas of support turn into resistance, or previous areas of demand turn into supply ranges. Okay, and that's kind of what we're looking at right here. So for example, if I come up into here and I write the word demand, or words demand zone right in there. Okay, so that's our demand zone. And then over here, we can see that this is our supply zone. Okay, and we have that in there. Okay, so we now have a supply zone defined, which basically means this is our rejection point. This also happens to coincide quite nicely with the push to the upside that we had seen, and it does mirror that of the 2019 run, but it's half the volume that we had seen previously. Okay, and this is in terms of people buying and selling, but more to do with people moving Bitcoin around, right? So it's interesting to kind of see. Now, when we throw that Gaussian channel on, what do we see? Well, the Gaussian channel, historically speaking, has been great at being able to identify bullish markets and bearish markets. Now, I like to use this on the weekly time frame. I do not look at this on an odd day time frame, such as a 5-day. And the reason for this is that when you start going into 3-day charts or 5-day charts, you are skewing the data that actually sits inside those candles. And what I mean by this is weekends typically have low volume. It's usually only retail investors that are involved in there. Pro traders aren't actually that involved. Institutional investors aren't involved. And so what you tend to find is that weekends, you have significantly lower volume that you'd have during the week. Now, when you use a 3-day chart, a 5-day chart, what you're essentially doing is you're skewing your data by some candlesticks having weekend data in there and some not having weekend data in there. Whereas a weekly chart, you can guarantee that it's balanced. Every single candle will include a weekend, and therefore you have a more stable analytical perspective. So I'm always going to use the weekly time frame or the daily time frame, and I'm going to always use something that is divisible by a day or divisible by a week. That way I can keep consistency within the analysis. Okay, so there's a rhythm and rhyme to why I do things. Now, here on this weekly time frame, the Gaussian channel has been very good at historically pointing out bullish markets or bearish markets. And when you closed inside a Gaussian channel after a bullish market, it's basically led us down into a bear market. There were a couple of anomalies that has basically skewed this, so it's still up for debate as to whether or not the Gaussian channel is going to continue to be predictable. And likewise, when we are in the bearish market and we close inside the Gaussian channel to the way to the upside, that's indicated a bullish market. So by all stretches of the imagination, as an indicator on your trading view charts, this gives us the idea that we're in a bullish market. I'm not so convinced. There are things that we've spoken about many times before, and I think over the next few weeks, we're going to find out whether or not the Gaussian channel holds its crown as being able to predict bullish or bearish markets. The jury's yet to come out on this one, so we'll kind of leave it there for now, and we'll see how it kind of goes. Ultimately, we are finding that the midline of our Gaussian channel is being support line. This is coming in at the $26,500 level. You can see that we found resistance, we broke through it, we found upper resistance on that $31,000 high point, but this Gaussian channel essentially is just glorified moving averages, and we should be aware that rejection from one of these moving averages could lead us down a little bit lower. Also, to bear in mind that the Gaussian channel, being moving averages, is laggy. It's yet to actually show us the true depth of where it's likely to go, and obviously also due to show us how it's going to turn to the upside. Okay, which it will do after a significant surge that we've had at the moment. This basically means that we might find ourselves closing above the Gaussian channel and then coming back down into the Gaussian channel and going down into a continuation of the bear market. It's yet to kind of be decided. Like I said, there's different variables now that the Gaussian channel hasn't seen before. And if I go up into my bitstamp data on this weekly time frame, I can show you exactly what I mean by this. Okay, so we have two examples. We have our 2015 and I have our 2018, right? And so the first thing I want to do is I want to basically take a Fibonacci tool and I'm going to run it from this first initial pullback, right? And then I'm going to move it over to where we bounced, and then you can see down here that we came down to the 1.236 fib level. Okay, the 1.236 fib level is kind of your maximum expectation on a C wave structure, and you can kind of see it right in there. Okay, so that is perfectly fine and basically allows us to see this as a corrective structure that finished and completed here and reversed up, right? Now, if we come over to the 2018 run, we can also see that we had this initial pullback. We bounced up to this level right here and we stayed above the 1.236. Again, very typically your three-wave corrective structure. And we can finish it right in there. Okay, so nothing unusual, but it gets rather unusual when we start seeing what was going on here. We had our initial pullback in 2022. Okay, we bounced up and we've come down deeper than the 1.382. So our Gaussian channel is only really referencing the Fibonacci level of 1.236. Okay, and now it's got to deal and contend with a 1.382 or lower, just narrowly missing that 1.618. So we have to consider that that is a pretty significant and rather different variable that simply hasn't been seen by this Gaussian channel before. So when I kind of think about these things and I kind of approach it through an analytical mindset and a logical kind of point of view, we have to consider what that might mean going forward. Those new variables could be something vastly different that could basically invalidate the idea that the Gaussian channel becomes this predictable crystal ball that gives us the idea of bullish or bearish. Okay, now they are of course just essentially moving averages, and I've seen a lot of moving averages get invalidated recently as well, so we need to be rather cautious. Now we are overbought on the weekly time frame as well, so we are looking for corrective action, so we're looking to come down into those lows. At the moment I'm looking at the $25,000 level as a key area of previous resistance, looking to turn it into support. If we lose that as support, then unfortunately we're probably going to be looking at going down lower than $20,000, but we'll have to see how that kind of plays out. Ultimately though, I'm not looking for us to close this weekly position above the Gaussian channel for the obvious reasons. That would be $31,500, and I'm not really looking for us to kind of go down lower than 26.5. It's possible, but I don't think it's going to happen, at least not for this closed position. That puts us pretty much squarely just in the upper half of this Gaussian channel for this weekly closed position. Okay, so keeping a close eye on it, it's always good to make sure that we have an objective, open mind when it comes to these indicators in the charts, because they are literally just looking at usually just an average position of or average price of a cryptocurrency. So we want to be really, really cautious. Don't just blindly follow them and believe that they're going to be predictable and show you everything as it is. Use your minds. Let's go ahead and jump down into our daily charts, right? Because this gives us a little bit more detail. We can see that we had the higher highs, higher lows, and the breakdown that usually happens from them. We found brief support at the moment on our 50 EMA on the daily. Okay, you can see that right here. That's that red line. And I do think because of the structure that's going on, and we kind of spoke about this on the kind of smaller time frame stuff this morning, we are likely to lose this 50 EMA at some point. I do think a test down on the 200 EMA on the daily chart is something that is likely to happen, but it's going to take some time. For example, we are either looking at this as an A, B, C structure, or we're going to look at this thing as a 5-wave drop, which will be a wave 1 here, wave 2, then 3, 4, and 5, and we'll be coming down significantly from that. Okay, so there's a couple of different ways of looking at it. Too soon to really know which one of those is playing out just yet, but it's going to be really interesting to kind of see how that unfolds over the next few weeks. So yeah, expect volatility, but I'm not expecting the 50 EMA to hold all that much longer, and we should lose that briefly and then look for a rally upwards before coming down and losing it again. Now on our smart money concepts, again, you can see we started to fill out some of the fair value gaps, but there are still plenty to fill. We haven't come anywhere near what needs to be done just yet. Now, Smart Money Concepts has an equilibrium area. This is an area that I think we are likely to revisit. This is basically 22 to 23.5, so that's looking pretty reasonable. But the fair value gaps are all the way down at the low end of 17. I believe on the weekly, they're all the way down here at 17K, as you can kind of see two big fair value gaps that need to be filled out. And I do think you're going to have to revisit these areas to kind of fill those out at some point in the future. Could take several months to play out. I don't know, but for the most part, you don't move up in straight lines. You always have these corrections. I mean, you take a look at 2019, for example, you can see that we do have this move to the downside during 2020. Obviously, there was obvious reasons for that, but even before all of that, you can see that there's a natural correction occurring. We moved up and then we moved down, but you can take a look at this and you can argue it as many different reasons, but it's still a 3-wave corrective structure. Okay, so we want to be aware of those things. Ultimately, where we are right now is a pretty healthy kind of move. On the weekly time frame. A little bit of a move to the upside, mirrors the initial start of this one here, but I don't think it's actually going to stick, and I do expect us to come down a tad lower overall. But that's my personal thoughts and opinions on that. We've got a couple of fair value gaps that need to be filled out though, and we can see those in detail on our daily chart as well. Okay, so ultimately from a smart money concepts point of view, lots of institutional grade candles here. These are basically big money, smart money coming in and dragging the price to the upside, and now we're starting to see this move to the downside. Again, we'll see how this plays out, but for the most part, don't expect it to go straight down. Do expect some volatility in the same way that we saw volatility to the upside. I think we've topped out here, and we'll see how that kind of plays out for now. But yeah, so in terms of our weekly position, we're just looking to kind of hold this area, but do expect us to come down over time. The Gaussian channel, jury's not out on that one yet. We'll keep a close eye on it. I do think we found the upper resistance right in the previous demand ranges. We are tilting up here, so I'm expecting a move down, looking to lose the 50 EMA at some point soon, and then just probably bounce up, probably retest the 29 to 30K area before crashing down towards the 200 EMA. Let me know what your thoughts are on this one down in the comments below, and if you have found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, and guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.